Hey, everybody. Welcome to Investing Unscripted, where we ask and answer the hard questions about investing. I'm Jason Hall, joined by my good friend, Jeff Santoro, the voice of the people. Hey, buddy.
So you introducing me while eating dinner is a new podcast vibe.
Yeah, it's different, right? These French fries are good. These are homemade French fries. I made them.
I'm sure those watching and listening are happy to be able to see and hear you chew.
Yeah, I'm doing my best to make it as loud as possible.
That's one way to lose listeners.
Special effects. Special effects here.
Yes. They're
All right.
effects. I'm not so sure they're special.
Fair. All right. So by the time people will be listening to this, by the time this comes out, Jeff, we will have been to Berkshire Hathaway's annual meeting. We will have seen things. We will have heard things. We're going to find out then if the things that we say as we're recording this are true or not. We're doing a prediction show.
I don't know if I'm going to call it a prediction show. It's more of a preview show. We are recording this on Tuesday the 29th at Jason's dinner time. And
Can I have a bite of my hamburger while you're talking?
Yeah, I'll talk for a little bit while you eat your actual dinner.
It's an Impossible Burger, by the way. I'm trying to be healthier.
Oh, those are good. I have to say, terrible business, but not bad food.
No, I agree. They're delicious.
Okay, so
You know when they're
recording
really good?
What?
When you put bacon on top of them.
Just to ruin the whole impossibleness of it.
Oh, it's called The Hypocrite, and it's delicious.
I think you just named the new burger. All right. Anyway, we are recording this on Tuesday, the 29th, but we are heading to Omaha, Nebraska on Thursday, and we will be out and about the world of the Berkshire meeting. There is a lot of events that happen outside the meeting, we are learning, and we will be attending some of them. And then on Saturday morning, the main event, the televised arena packed full of investors, stock nerds listening to Warren Buffett answer questions with his colleagues from Berkshire Hathaway. So we decided it would be fun to do a little Berkshire episode, talk Buffett, talk Berkshire, go through the portfolio a little bit, ask each other some questions, make some reckless predictions, and then come back after and probably not dedicate an entire episode to this, but we should revisit some of the things we say today after we're at the meeting. Because who knows, maybe there will be some news that is worth revisiting once we're back.
Yeah, there will be. There always is. So even if it's just some of the quips, they're always fun. And we were at the meeting, the last meeting that Charlie Munger was at before Charlie passed away. And he was still just as razor sharp as ever, a little slower to respond to things,
Took him a while to get rolling.
But when he got going, he got going. But I think the thing people forget about Charlie is he was falling asleep at Berkshire meetings 30 years ago, right?
Yeah.
So there's no
there was a moment 3 years ago when we were there where, like, for the first, I don't know, probably first hour or so, we were all kind of like, yeah, he doesn't seem too good. Then he got rolling and he was as sharp as ever. So yeah, I guess that's just what happens when you're, what was he, 99 that year, 98, something like that?
Yeah. I think he died right before his 99th birthday, I believe.
No, I think he died right before his 100th. I think he was 99.
Okay. Yeah, it was one of the two. I couldn't, you'd think there'd be some way to look that kind of thing up.
Well, let's just hope we have a different impact on Warren Buffett after we visit him this year.
We're veering off into potential silliness and we haven't even gotten started. So let's get to the meat of what we're going to do. So the kind of the core things that we're going to do is we're going to talk about some of our favorite things about Buffett, lessons, things that we've learned. We're going to do some ranks of stocks that Berkshire's held, talk about some of the wholly owned subsidiaries that we like, our favorites. It's going to be fun. I think this will be a fun little show. And what I'm hoping, Jeff, is I'm hoping some of the people at home play along with us and they tweet at us or find us on Blue Sky or email us at investingunscripted@gmail.com and give us their takes on these same things. Give us their thoughts as well. We'd love to hear from you guys and we can share that on the next mailbag or the next follow-up episode that we do sometime in the next few weeks.
Yeah, that'd be great. So to start out, let's clarify a couple things because in the world of investing, I think the terms Berkshire and Buffett get conflated a lot as if Berkshire is Buffett and Buffett is Berkshire. And I guess to some degree that's pretty true. But
I'm going to have another bite of my hamburger.
Yeah, go ahead. You don't have to announce it each time.
Yeah, I do.
But in terms of the investments, and this is something actually Tyler Crow and I were talking about recently, which is there are clear Buffett investments and then there are clear investments, at least in the last bunch of years, that were made by his lieutenants. And so there's that delineation between what's in the Berkshire Hathaway portfolio. But I think we colloquially just say, oh, Buffett owns that. And what we mean is Berkshire Hathaway owns that.
Right.
I think that's a good starting point, is just to clarify that piece of it.
Yeah, no, I think that's fair. Ted Weschler and Todd Combs, who now each are managing multiples of tens of billions of dollars in equity investments, and both have also taken more roles with the subsidiaries, leadership roles, executive roles as well with the operating businesses. And Buffett has said, hasn't said as much about it more recently, but in the past few years, he's talked about how since they've joined the firm, their stock picks have actually generally outperformed Buffett's. So I think that's one reassuring thing, thinking about the long-term health of the business, is having that foresight to, I mean, they've been there like 15 years at this point, almost, definitely over a decade. So they're finding the right people for the transitioning of the managing of the equity portfolio. I think that part of the business is in really, really good hands. And I mentioned that, Jeff, because it segues into thinking about the return profile of the business and the success of Berkshire. We always think about the investments, right? We think about Coca-Cola and American Express and Apple more recently, those big wins of those stocks that Buffett has bought, and how much of the influence of Munger on his stock picking. Still value-focused investor trying to buy at bargain prices when he can, but less focus on bargain prices and more focus on really high quality businesses with economic moats, right?
Yeah.
And those businesses those stocks being like the big thing, being this great investor picking stocks. And it's true, but his capital allocation skills around finding businesses to buy and then integrate has also proven to be exceptional. And not just the businesses, but there's a lot of it with the quality of the businesses. Just a couple of examples. I think most people have heard the story about See's Candies. See's Candies kicks off in free cash flow every year more than they paid for the business, like multiples of that at this point. And the equipment, when they bought the business, is still making candy today. And that equipment had been operating for years at the time. So buying those kind of quality of businesses is smart. Geico, another exceptional example. But then also the people, because so many of the businesses that Berkshire has acquired over the years, the founder was who was running the business and sold it to Berkshire. They often continued to work and continued to run that business. Forest River, the company that makes the campers, RV campers, their founder who ran the company, Buffett wrote about him in the annual letter earlier this year, died in 2024. And he was still working at Forest River up until months before his death. So finding a lot of people that were cut from the same cloth as Buffett himself is the leaders of those businesses, I think has played a really big role in Berkshire's success. And then finding more of them, like Ted Weschler and Todd Combs as stock pickers, and then Ajit Jain, who we'll hear from on Saturday, and other executives that are stepping up to take bigger leadership roles and will take on even more roles when Buffett's gone.
Yeah, I think, all right, so one of the things that I learned about the company when I became interested in investing over the past several years is it wasn't really till I sat down and read the 10K for the first time that I really got a sense of all the companies that they own. Because if you read the 10K, and it'll take you a long time just to get through the business section, because it really does give at least a little bit of information about, I think, every single business they own. But there's a couple ways I like to think about the Berkshire Hathaway portfolio. And we kind of bucketed it on our planning document as like the wholly owned businesses and then the stock investments, right? And then also the subsidiaries. But so like the highest level, I think the easiest way to understand it is like, just look at the numbers how they categorize the results when they put out a 10K or a 10Q. At the top, they break out the three big buckets of insurance revenue, right? So there's Geico, there's Berkshire Hathaway Primary Group, and then there's Berkshire Hathaway Reinsurance Group. And then they give a total insurance revenue. So that's the fact that they give total insurance as a line and they break it out to those three pieces tells you that that's one of the most important. And I think by revenue, certainly the biggest part of the business, the insurance as a whole.
The other part of the insurance business too, and we'll talk more about this, is the float, right?
Right. Which is the engine that runs the investment side of the business. And then you have the railroad, the energy company, Pilot Travel Centers, manufacturing, McLean, service and retailing. And then those are the big buckets of revenue. Then you see the profit before taxes, which is just the earnings of those. And then there's investment income. So if you think about the company, like in that sense, you get like sort of an idea of where they're reporting on the biggest, most important parts of the business. Now, if you want to break down what manufacturing revenue means or what service and retailing revenue means, then you have to go to the 10K to see like, where does Dairy Queen fit in? Where does Brooks Running fit in? Where does the Pampered Chef fit in? All of the companies that we'll see when we walk.
There's almost 70 subsidiaries now.
Yeah. And one of the fun things about going to the meeting, which we discovered when we went back in 22, is there's a legit exhibit hall. Like if you go to a conference and all of these, I guess not every single one, but most or all of them are there showing what they do or selling things.
Yeah,
there's a nice spatula for my wife.
There's at least a few dozen that are there that are selling their wares.
Yeah. I almost bought a pair of running shoes when we were there.
I almost bought a train.
You did buy the hat you're wearing.
I did. I bought the hat. Yeah.
Yeah.
I didn't really almost buy a train, but I did buy the hat. Yep.
So I think that's a good place to start, is just to understand how there's the wholly owned businesses, like they own all of Geico, right? And then there's the businesses they own parts of. And then there's the investment portfolio, right? And that, to your point about the float that comes from the insurance business, that's the money that they get to use to invest with after they've collected it from their insurance customers and before they have to pay it out in claims, they can invest it. And that's where he's been able to buy Apple and buy Coke and buy American Express and Moody's and all of the big stock investments that we talk about. As stock nerds, that's the thing that we end up talking about the most, right? It is not the fact that they own the railroad of the hat that you have on, but more, what did he buy? What did he sell? What's he thinking? Why does he have so much cash? What's he going to do with it? It's the stock side of the house that I think is the most exciting for investors to talk about.
Yeah, well, weirdos like us and the vast majority of the people that are going to be there on Saturday, that's kind of the thing that drives us and is interesting to us. And that's where we feel an attachment to Uncle Warren. That's 95% of the people at the meeting. The other 5%, Jeff, I'm excluding the media here, they're just really, really rich because they, or like their grandpa bought Berkshire Hathaway a long time ago. They're just really rich.
It is funny, you fly into the Omaha airport, which is not a big airport.
No.
And yeah, I've only been there one time and it was during this weekend, but you land and you're just like a whole part of the airport that's just little private jets.
Yeah. No, they're not little. They're not little.
Okay. They're smaller than commercial airliners is my point.
But they're private jets.
Yeah. They're nice.
Yeah.
And speaking of private jets, NetJets is a company owned by Berkshire Hathaway.
Yeah. And I believe their pilots were striking.
That's right.
There.
Yeah.
There were hundreds of their pilots lining up outside of the convention hall. So that was interesting. Yeah, that was interesting.
Hey, everybody. We'll be right back. But first, a word from our sponsors. FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes.
Investing Unscripted is brought to you by the Chit Chat Stocks podcast. My name is Ryan.
And my name is Brent.
And we're the hosts of the show.
On Chit Chat Stocks, we are constantly researching new stocks from high flyers to undiscovered small caps, diving deep into business models, debating competitive advantages, dissecting valuations, and we have a fun time while doing it.
Supercharge your investing research and start listening to the podcast today. You can follow the Chit Chat Stocks podcast on YouTube, Spotify, or Apple Podcasts. Follow the show so you never miss an episode. That is the Chit Chat Stocks podcast.
All right, so let's do this because you did refer to Buffett as Uncle Warren. So one of the other things that I think draws people to Berkshire Hathaway and Warren Buffett, and prior to his passing, Charlie Munger as well, which is the lessons and the wisdom that they have graciously graced us with over the decades. So what are some top lessons that you've learned from the writings and speeches of Munger and Buffett?
The one thing that has really clarified for me over the years that I think is still misunderstood by so many investors, in particular the financial media, is what's 30 plus years ago, more than 30 years ago, when Buffett wrote in one of his shareholder letters, our preferred holding period is forever. And the key there that I think generally the focus is forever and the focus should be on preferred, right? Buffett has written ad nauseum and spoken anytime he was asked about it, about the concepts of being a part owner of a business and treating your stock ownership as that versus just a price on a spreadsheet or lines on a chart on a screen, but really thinking of yourself as a partner with that business. Ideally, when you go into a partnership with a business, you're going into it for the long term, right? And you're thinking about it as a long-term investment. If you're making a private investment, if you have a former colleague that is brilliant and has a great idea and you know they can deliver on it, and you participate in the friends and family round in that business and invest, you realize it could be many, many years before you can realize any value there, right? And you're patient and you're not checking the price all the time. But what do we do with our brokerages, right? We log in multiple times a week sometimes and look at the prices, think, okay, is it too expensive right now? Should I sell right now? And Buffett's focus has always been very much just business focus first and understand the business, read the filings, know what's going on with the businesses. And ideally, you can continue to hold because the business is doing all the hard work. You're just monitoring the business and making sure the results are in line with your expectations. But Buffett has also proven very willing to move away from an idea incredibly quickly. We can look at the airlines, right? How quickly during the pandemic, he made the decision that his prior reversal of the decision that airlines were uninvestable and everything changed and there was lots of consolidation and businesses built scale and he saw an opportunity for profit in a vastly changed industry. And then the pandemic happened and he realized that these companies were going to be buried with debt for years. And that's assuming that they even start flying, right? And a lot of them their flights were down 90% for most of a year. And he moved on very quickly. He did not wait around on that at all. So Buffett has proven willing to turn over the portfolio.
He's done it with banks too.
Yeah. Oh yeah. Yeah.
I know Bank of America is still one of his biggest holdings, but I believe there was a time when Wells Fargo was his bank of choice.
Wells Fargo was the largest for a very long time. Traditional bank, because American Express is a bank too. But
right. But I'm thinking, the big traditional banks.
Banky banks.
Right.
Yeah. And he spoke very favorably of management. And then the minute that it was clear that the things that they had done were going to be reputationally hard to come back from, and the handcuffs that the regulators put on Wells that are still in place, he moved on. Yeah,
the way you frame that, I really like that. Don't focus on the forever part of that quote, focus on the preferred part of that quote. I think that's excellent way of thinking about it. And also the analogy of like your best friend or your former coworker, whoever, who you really trust and know has an idea and you believe in them. You believe that they're going to be the ones that can see that happen. Yeah, you wouldn't be like, oh, there's a bad quarter, I'm out. Even if you could, even if you had the liquidity to do that, you wouldn't do it to someone you really trusted. And I think, now granted, he's in a different position. If he wants to meet with the CEO of a company that he's considering buying their shares, that person's going to meet with them. But it's that mindset of, I'm in this because I believe in the management. I'm in this because I believe in the company and the brand and the moat, whatever it is.
Yep.
And I'm going to see it through until the facts change and that I'm changing my mind. And I think that's he has this reputation of buy and hold, but he can be pretty active when he feels like he made a mistake.
There's the other side of that too that I want to hit and that I'd like to hear from you. I mentioned the airlines not just to talk about how quickly he pivoted and sold, but part of Buffett's, when he chooses to sell, or some things that he's able to recognize that I think also apply to him as a stock buyer and as a stock picker and as an investor broadly. He said, and we pick on him sometimes about the airlines, right? This is the man that wrote at some point that investors would have been served much better if someone had have shot Orville and Wilbur down.
Right.
Tongue in cheek. And it's true. The industry just incinerated capital for decades and decades before it finally went through a period of consolidation and the earnings got healthier and the industry performed better. But he made that mental shift and we beat him up because he was wrong. But this is somebody that back during the dot-com run-up, when Berkshire stock was vastly underperforming a raging bull market, people were saying Buffett's lost his touch because he wasn't buying tech, because he said, look, I don't understand how to value. He never said these are terrible investments. He said, I don't understand how to value these businesses. I'm going to stick to what I understand and know how to value. And of course, eventually that led to And Todd Combs played a role in this with Apple, with him, led to him investing in Apple, and Apple, of course, becoming the biggest dollar amount Berkshire has ever invested in a stock, its biggest dollar amount winner. And now, of course, they've sold half of that position. So all of that to say, sometimes we think of Buffett as this disciplined, sticks to his process, doesn't change, has his way of doing things and does them that way. And I think he is one of the most incredibly mentally flexible people that I've ever studied. And as an investor, that is probably the biggest source of his success. It's compounded by his vast intelligence, his memory recall, his focus, his ability to study, and the passion that this is his life's work. Like all of those things are force multipliers. But his mental flexibility and the ability to recognize when the rules or the facts or the reality on the ground that he had been operating under is no longer in play and things have changed is remarkable. And that's why he's been able to find these big winners in 7 different decades of vastly different economies and market environments.
You stole my second one with that last little piece, but so I'll come back to it. But the first thing I was going to say was just patience. Granted, my years of experience in terms of paying close attention to the stock market date back all the way to 2020. So 5 years for me of just like paying attention. I think I'm, experienced enough to be dangerous, but not really experienced when it comes to like market history and things like that. I mean, I certainly remember the .com crash and I remember the great financial crisis. I just wasn't paying close attention to investing in stocks at that time. But just in the past 5 years, there were plenty of times that I think even people who like had a lot of experience and really understood Buffett and Berkshire were saying, oh man, now look, he's got to buy something this quarter. I can't wait for the 13F to come out to see what he bought. And then it comes out and you're like, oh, kind of nothing. Or Japanese trading houses or whatever the thing was. Like we're all expecting him to spend the huge pile of cash and he just doesn't. And there's probably a lot of reasons for that. But I think that is his level of patience, his level of waiting for the pitch he wants to swing at is, and I'm going to tie it to what you just said in my second point, that consistency and sticking to his process over decades. What he buys for stock before he turned 13 or something. So this is like, 80 years of investing. Now that said, the mental flexibility, like you pointed out, and this is these dueling ideas is where I think that what's most interesting about him to me, right? There's this remarkable consistency and patience, sticking to a process, knowing what he knows, not expanding his circle of competence too far, too fast, but then at the same time, being flexible enough to, even if someone pushed him towards it or sort of pitched it to him, to be open to the idea of buying Apple, or even trusting lieutenants enough to buy Snowflake at the IPO, right? I know that wasn't a quote unquote Buffett pick, but by hiring someone that you have confidence enough to say, you don't have to bring me what you want to buy, just go do it, says a lot about his evolution as an investor and as a leader of the business as well. So it's those two things. It's the remarkable consistency on one hand, but not like the stuck in the mud, I only do things one way. And not to be an ageist, but the stereotype of older people is they get stuck in their ways and they don't want to try new things. And I think he's been the exception to that stereotypical rule, because he was making some of these changes in how he invested in his 60s and 70s and 80s and 90s. So I think that's what's most impressive to me. Like you said, the mental flexibility, but also not giving up on what has made him who he is.
Yeah, I think that's right. And the thing that's interesting is to contrast him a little bit with Charlie Munger, and they were very yin and yang, as much as they were two similarly aged men whose roots were in the Midwest and were interested in business and investing. So they had all those common interests. They were also two very, very different people, both voracious readers with extraordinary memories. But while Buffett spends most of his time reading annual reports, Charlie Munger was reading literally everything else, right? I do think that there was a little bit of that always be learning kind of mindset. Jeff, he actually probably picked that up from you, right? Learn, don't trade.
Yep.
All Berkshire investors should thank you for teaching Buffett that. But
yes,
no, but again, the key is like that constant voracious consumer of information. And willing, you have to be willing to revise your previous opinions and beliefs about things if you're consuming that much information on a regular basis. 'Cause at the end of the day, if you spent 5 or 6 decades reading annual reports literally every day of your life, you know what to look for, where to find it very, very quickly. So you're always looking for something that's going to stand out if you're going to be doing that.
All right. So taking into consideration every company that Berkshire has owned or currently owns. So you can choose from things they've sold. What is your favorite stock that Berkshire has owned over the years?
Maybe one of the ones that's the most important is one of Buffett's early investments. I think Buffett might have owned some in his partnership before, but Berkshire ended up acquiring blue chip stamps. And the reason I think this one is really compelling to me, it was a big winner, number one, but 1A, Munger was also a big investor in the company. And that's one of the things that kind of drew Charlie Munger and Warren Buffett closer together. And they started to build their relationship and partnership because of that business. So I think that's one that every Berkshire investor should be very, very thankful for, because it played a big role in Munger being part of Buffett's professional life and being able to influence him in the way that he did to reshape the way that he thought about how to create value with Berkshire and investors' shareholder capital.
Yeah, I didn't know about that story or that company, but it reminded me of who wrote the big biography of Buffett? Lowenstein?
Yeah, Roger Lowenstein.
Yeah, I read that.
Up here,
and it's one of those.
right there. Yeah.
And
I know pointing at the screen does really good for people listening to podcasts.
Yes. Well, so does eating your hamburger earlier.
That's great for the people on YouTube. You're welcome, people.
When you read about their early history together, and whether it's that particular company or just the lessons they learned and taught each other over those earlier years, that's really interesting, because we think about Buffett through the lens of the last, 30, 40 years, when they became a media sensation too, as the Berkshire meeting grew and became televised and all that kind of stuff. But what's really interesting is, like, what were they doing in the 60s and in the 70s, like before they were really on everyone's radar. So I think for me, I went more recent and more recent in my own portfolio. So I'd have to say my favorite stock that the Berkshire does not currently own anymore is Costco. Now, Munger was famously a huge fan of this company, and I don't think Buffett ever stopped being a fan once they sold out of it, because it was only a couple years ago, I think, that they sold their stake. And what's interesting is I was reading about it online before we recorded, and whatever article I came across speculated that he sold it for valuation reasons. And I don't know if that's true or not, but if it is, it's interesting to me that he sold out of it and not just trimmed it like he's kind of doing with Apple. Now, it could just be that it wasn't that big of a part of the portfolio. Apple was 25% of the portfolio at one point or something like that?
No, it was half.
Half? It was even more?
Yeah,
okay.
it was because it had been they bought such a large stake, and then it did so well. At one point, it was almost half the portfolio.
Yeah, but that's just interesting to me, because I am a huge fan of the business. I know Charlie Munger was. I heard the last interview I heard him do before he passed away. He did a podcast a month or two before his death, and he talked about Costco on it, and just basically the joke we all say, I should have owned more Costco. So
he was on the board for 25 years.
Yeah. He also talked a lot about BYD in that interview, and how when he met their founder or CEO, he was just like, the gist was like, I'd give this guy all my money right now. Like, he was that impressed with him.
Well, he was the primary reason that Berkshire made an investment in BYD before it became a public company.
Yeah. Anyway, so going from stocks not currently in the portfolio, that would be my choice. I'd go with Costco. All right. What about current stocks in the portfolio? So I went to look at the portfolio today just to refresh my memory. And do you know the ticker BATRK?
I do.
I just assumed that had to be your favorite current holding. You tell me it's not.
That is the Atlanta Braves holdings, by the way. So Liberty Media, interesting corporate acquisitions. And I'm bringing this up because besides the fact that a bunch of those Liberty stocks are in the Berkshire portfolio, there's an interesting transaction that happened that is something that Berkshire has done in the past as well. So Liberty Media, which is the Malone business, owns the Atlanta Braves because Ted Turner merged TBS, which included CNN and the other TBS networks, and also the Atlanta Braves, with Time Warner, which of course merged with AOL. It was just this big corporate giant mess. None of it really went well, is the point. John Malone's Liberty Media owned a pretty sizable amount of AOL Time Warner stock that they didn't want to own. And AOL Time Warner was actively looking to acquire shares, to buy back shares. It also had no interest in owning a professional North American Major League sports team. So John Malone worked a deal to trade their AOL Time Warner stock to AOL for the Atlanta Braves. And the reason is if the assets are of similar value, you can do things like offsetting capital gains. So if they had have sold the investments that they held in AOL Time Warner at a gain, they would have realized it as a taxable event. So you trade the two assets, and nobody had to realize any gains. So that's how the Braves became part of Liberty Media. They're in the process, and I think they finally completely last year spun it off as a separate entity. It's still majority owned by the Liberty business, but you can now invest in it and own a share of my Atlanta Braves. That's pretty cool.
So Buffett didn't buy the Braves. He bought Liberty Media and then got the shares when they spun off
when
the
it was
Braves.
spun out.
Yeah.
That is correct. But the reason I wanted to build on that and explain that transactional part of how it ended up being part of Liberty and now owned by Buffett or Berkshire, and the reason we can get away with saying Buffett owns it is because Buffett owns a crap load of Berkshire stock. So indirectly, it's true he does own it, right?
Yeah.
The reason it's interesting because one of Berkshire's subsidiaries is a little battery company called Duracell. You may have heard of it. Duracell used to be part of Procter & Gamble. Berkshire Hathaway used to own a lot of Procter & Gamble. It used to be like a top 7 or 8 holding. It was a pretty large position. Buffett wasn't particularly interested in owning Procter & Gamble anymore. It had been a big winner over the long term, but this is when Procter & Gamble was going through its kind of selling off all of these things that it acquired over the years thing to kind of refocus on its core brands. And one of the things that didn't really fit with Procter & Gamble is a battery company. So a la what Malone did with AOL Time Warner, Buffett and Procter & Gamble did the same thing. Traded some stock and they got Duracell and Procter & Gamble bought back some of their stock. So win-win.
All right. So I'm assuming that this spinoff from Liberty Media that is your baseball team is not your favorite currently held Berkshire stock. So what is it actually?
No, it's not. It probably should be. If I was a true Brave stan, it would be. So this is one that's one of the biggest companies in the world. And it's not typically one that you would probably expect to be hearing me say super positive things about because I don't talk a whole lot about it. But it's a business that has so many Buffett characteristics. It has some incredible economic moats, including very strong brand power, generates a lot of free cash flow, has proven to have leadership that's smart and disciplined about allocating capital and focusing on creating value for shareholders. It's Amazon. Now, the thing is, Amazon is a tiny little stock in the Berkshire portfolio. I was trying to look it up and see. At the end of the last quarter when they reported, it was 0.7%. No, 0.8% of Berkshire's stock portfolio. 10 million shares, about $2.2 billion. So that's the one that I think is the most compelling. I know you probably thought I'd pick one of the banks or something.
So why that one though? Just because it's a small position, even though it's a huge, successful company?
Because I think it's more emblematic of the sort of investments and the holdings that we're probably going to see be more common in Berkshire over the next 40 years versus the prior 40 years. So that's why I think it's interesting to me.
Interesting.
What about you?
Apple, for a couple of reasons. I'm just generally an Apple fan. I like the company. I use their products. But to me, it sort of like you said, the other one's emblematic of so many Buffett things. What I love about his Apple investment is it really tells the story of some of the stuff we've already talked about, which is like a willingness to evolve over time, break out of your circle of competence, learn about a company enough that's outside of what you typically invest in to make a big investment in Apple. But then the second layer to that is, even though it is a tech company, it's a brand and it's the Coke of the modern technology, right? I think that more than anything, assuming someone had to get him up to speed on Apple or whatever he was able to glean on his own from reading filings, I think what he probably identified the most with is this is a brand. He's probably seen the commercials and just the ubiquitous nature of the iPhone and all that kind of stuff. But it's a good lesson in what a big winner can do in your own portfolio, right? And there was some fun, I forget what year it was. I was trying to go back and find it. Sometime in the last couple of years, he made the point in the annual letter that without buying an extra share of Apple, his stake in the company grew like some ridiculous amount that year just because of buybacks. And just the fact that he thought of it that way and pointed it out in the letter, I think this is just another way that he's teaching us a lesson through his own investing portfolio. Now, even though Apple's my favorite, I have a second one that I want to throw at you because I think this is just interesting. So a stock he's had for a while now that I've always been interested in why is SiriusXM. And for a couple of reasons, it has not been a winning stock. And I don't remember if this was also in his portfolio because of some sort of spinoff or something, but
Yeah,
Or-
it was the Liberty thing.
But secondarily, I think it's interesting because I've always thought for the longest time that stock should be a better investment than it has been.
Yeah. Yeah.
Because I will tell you that I listen to podcasts in my car 98% of the time. The only time I don't is if I have other people in my car who don't want to listen to podcasts. And I pay for a yearly SiriusXM subscription just because I do.
That's funny.
And I
Yeah.
feel like a lot of people do the same thing. I can't fathom listening to regular radio anymore. It's just every 10 seconds, there's 14 minutes of commercials. It drives me absolutely batty. And just from that anecdotal piece of knowledge alone, I'm like, how is this not the most successful company in the world? They're a monopoly. No one else has satellite radio. They merged with the only other competitor.
Yep.
But I guess you're competing against streaming audio and podcasts and things like that. But anyway, just want to throw that one out there because I think it's interesting.
Yeah, as someone called me on another live stream recently, one of the admin folks running it, they referred to it as old man radio. And I thought that was just radio.
Yeah, it is.
So I have a trivia question I want to ask you here. So at the end of the last quarter, there were 41 stocks in the Berkshire portfolio. Now, this is just stocks that are required by the SEC to disclose. So this is publicly traded stocks on U.S. exchanges. Doesn't include any of the Japanese trading companies or any of that kind of stuff. So
And this is end of
41.
Q4 because we haven't gotten the 13F for Q1 yet, right?
Correct. Yeah, this is still old data. So my question for you is how many of those companies, 41 companies, does Berkshire own 9% or more of?
Oh, I just looked today, but I didn't look at that part of the chart. 5.
11.
I-
More
I-
than
I-
a quarter of the stocks in the portfolio, they own 9% of the company, at
Yeah.
least. How many do they own 20% or more of?
I feel like that's only 2 or 3.
No, it was
One?
your first answer. 5.
5. Okay.
5.
Yeah. I
Yeah.
mean, when you look at the dollar amounts too, that how much in dollar amounts do they own of Apple?
So before I give that, I give that. So we talked about it before. It used to be half the portfolio. They've cut that down a pretty good bit. It's still almost 30% of the portfolio. What percentage of Apple do you think Berkshire owns?
Oh, of Apple stock?
Yeah,
Like 2 or 3%?
2%. Yeah,
Yeah.
it's 2%.
Yeah,
2%.
that I knew, but
$75 billion
yeah, that's
is
it.
roughly the market value.
I just imagine that imagine owning $72 billion worth of a company and that only being 2% company that you
Yeah.
own.
Yeah.
Wild. When you start to get to these big numbers, it's mind boggling.
Let's jump
Um,
over to the cash for a second here. I think we've talked about as much about the portfolio stocks. I'm going to talk about the cash because it's $360 billion in cash and treasuries. It's just massive amount. And I think like the dead minimum that they would want to hold in cash for like catastrophic losses and that sort of thing is probably roughly $40 billion. So what that means is you've got this, call it $320 billion in cash. There are only 24 companies in the S&P 500 that Berkshire doesn't have enough cash that they could just write a check and buy. And Berkshire is one of those 24. Yeah, so there's 470 odd companies in the S&P 500 that Berkshire has enough cash that they could write a check for.
Wild.
And that's not even talking about their access to additional liquidity, right?
Yeah. All right. Let's get to the fun predictions, reckless predictions in a second. But I just want to, one of the other questions that we were going to ask each other, and I don't think I want to do it spend much time on it, but I had some funny answers, I thought. So we were going to ask each other our favorite subsidiary companies. And this is hard because like you don't know the finances of it. So I took a fun look at this, not like I like this because it has a high amount of free cash flow. So first I have to talk about Acme Brick Company.
Because you
Because-
grew up watching Looney Tunes.
I cannot believe that's a real company.
It's a real
right?
company.
Like
Yeah.
Acme Brick Company is like the company that the Roadrunner would use to drop bricks on the Coyote.
On Wile E. Coyote, yeah. Yeah.
All right. So then my second one is Brooks, the running shoe company. And that's just because that's the sneakers I run in. And the third is Dairy Queen, because who doesn't like a Blizzard? Who doesn't like a Blizzard?
That's awesome. Those are good choices. So I'm gonna go with See's Candy because that stuff is just so good.
Yeah, but it's too cliche. I had to go less.
That's fine. You can go
less-
different.
less known.
I'll call your Brooks call and go with that because I run in Brooks most of the time.
Yeah.
It's my favorite running shoes. And my third is also Dairy Queen. And I have a very specific reason why. I do love Blizzards, but I also love my wife. And my wife and I both had an after school job together at Dairy Queen. And that's how we got to know each other many, many years ago.
Oh, that's sweet.
She would grab my butt when I would scoop the ice cream.
I'm going to cut that out of the pod.
I had a boyfriend at the time.
I'm definitely cutting it out now. All right, let's move on to reckless predictions. First question, will Buffett announce his retirement before we go to Omaha or during the meeting?
Yeah, I could make the case for yes as CEO. I expect his transition is going to be stepping down as CEO, but remaining chairman of the board.
Isn't his son the chairman of the board though?
No, his son's on the board, has been for a long time.
Oh, is he also is he CEO and chairman, Buffett?
Yeah, CEO. He has been for.
Okay,
Since,
I was going to
yeah,
say he wouldn't have to like kick his son out.
No. And Charlie Munger was vice chairman and
Okay.
Buffett was chairman. So that was the arrangement for 40 years. I think it's possible that he may announce a succession plan, right? That they may announce that.
But the succession plan is known.
But no, not the people, but the timeline.
Oh, I see.
Yeah.
So I don't think he would do it prior to the meeting or at it because it would turn too much attention to him. And I don't think that's his vibe.
Yeah, no, I think that makes sense. No, he loves the attention, but he doesn't like to direct the attention to himself.
Yeah. But our next question is, will he retire before the next meeting, before the 2026 meeting? And I think yes, but I think what's going to happen, what's most likely to happen, this is my reckless prediction, is sometime in the not too distant future, we're just going to get a random update to that janky 1992 website with a letter he wrote, like he did when he drops the annual report and stuff like that. And it's just going to be a letter saying exactly what you just said, laying out the plan. I'm going to step down in this capacity on this date, because I feel like that's how he typically disseminates news, is to just write a letter and post it on his website. So that's my prediction. I think that if you and I go to another Berkshire meeting after this one this week, he will no longer be the CEO of the company when we go.
Yeah, I agree with that. I think that's a prediction I could agree with, is that he won't be the CEO next year by the next year's annual meeting. I could make the case that he could still be chairman.
Yeah, because I feel like that's the kind of job you could, and I don't mean to be morbid about it, but it feels like that's the kind of job you could just do until you physically can't anymore.
The thing about it is my concern is once he slows down, does he come to a full stop?
Yeah.
Again, not to be morbid about it, but that is my one concern, is what is the in-between look like? He's already in his late 90s. He puts in a tremendous amount of hours. This is what he loves to do. It's his life's passion.
All right. So let me ask another question that's not on the outline. If you had to take one of these two bets, bet one is he actually steps down at some point and plans it, or bet two is he's just going to go till he can't.
Die at the wheel?
Yeah.
I think he'd step down first, because I think his legacy and what he's built and his respect for the people that he works with and that work with and for him and that will still be there running the company when he's gone is too high for him to put them in the position to have to deal with the aftermath. I really think that's probably the case. I don't know if I would have said that 2 or 3 years ago, but I think with Munger dying, with more of the executives who were running the businesses that he bought from that are starting to die, I think that realization that the business has got to continue, the show must go on, right? I really think that he's far more likely to leave, even if it isn't necessarily the terms that he would want to leave on. I think he'll leave sooner rather than later from the CEO job. I could see him, them having to wheel him out as chairman. I could see that happening.
Yeah, I think when I thought through that, my own answer to the question I asked was, well, Munger didn't, right? He just died in his position, but he also knew he still had Warren there, and he is, the number two.
Well,
so
it was vice chairman, and the corporate culture and the culture of the board is what it is, and he wasn't Warren Buffett, right?
Yeah, I also just feel like, I don't know. I don't know Warren Buffett personally, obviously. I could be completely wrong about this, but it did seem like they enjoyed each other's company an immense amount. And I just feel like it for the last couple of years, as he's done this job without Munger around, it's probably just less fun for him. I'm actually surprised he hasn't stepped down already because of that. But, I'm sure he loves the work.
Okay. What else would he do?
Yeah.
Right.
Yeah.
So I think that's, I think it's right. Okay. What's next?
All right. Will Berkshire beat the market over the next 5 years?
No, I don't think it will. From where we are right now, the stock it's an incredible business. But number one, I think if we see the things that are happening with the economy right now and the Trump tariffs and potential trade war and all of that continue to play out, as strong as the business is, as well capitalized as it is, so many of those operating subsidiaries are going to take it on the nose. It's going to be tough for those businesses. They're very cyclical. Their profits are going to get bloodied. The business is going to be completely fine. But because we're at a point now where the stock price is already very, very elevated, we're looking at potentially a protracted period that's going to hurt the operating results of the business. And I don't know how they're going to invest their way through this in meaningful ways to turn that $300 billion in cash into better market opportunity. If we do go through a tough economic period, I think they'll deploy some cash and buy some more stuff. But I think they're also happy to get 4% on treasuries. So I don't think there's any huge rush to deploy that cash. But starting from the point we are now, potentially going through a tough economic cycle, then getting to the other side of it, I think the rest of the stock market would be in a better position because the stock market is cheaper than Berkshire is right now already, even though it's recovered a good bit of the losses from earlier this year. I just think the stock market on the other side of this, if it's healthier, it's going to do well and it's going to outperform Berkshire during a bull run because that's what we know. If we don't go through a good economic period in the near term, or if the stock market doesn't do well, it's probably going to be partly because of economic conditions and partly because of valuations for stocks broadly. The market's cheaper than Berkshire, but the market's not cheap, right? So a lot of the wealth is tied up in the stock portfolio. And again, I don't see a path for them to be able to just allocate into more stocks to boost the returns. I think it's going to do well, probably about the market, but yeah, I don't think it's going to beat the market over the next 5 years.
All right.
What do you think?
I think I agree with you, but I'll take the other side of the argument just for fun. So here's the scenario, I think, where Berkshire could outperform the S&P 500. We go through a rough patch due to tariffs and all that kind of nonsense, but it's not as bad as the worst case scenario where all of the subsidiaries that you just said would take it on the nose actually don't. But the resulting market environment is so uncertain that we don't get a 40% drawdown, but we also don't get a April 2020 complete rebound. And we just have a middling market for a couple years, up a couple percent, down a couple percent. And in that scenario, not an economic catastrophe, not really bad results for its subsidiaries, but just a lousy market environment. Yep. I think Berkshire could outperform. So I think you're right, but that would be my argument for the other side of it.
All right, I want to give you a quick 10-year rundown. So if we look at the past 10 years, from the market close today, here close to the end of April, Berkshire's up about 269%. The S&P 500's total returns are 234%. So it's outperformed by a modest amount over the past 10 years. Now, if you just reset that to the beginning of instead of April of 2015, you go back to the beginning of 2015 and you go to the beginning of this year, guess what? S&P 500 has outperformed Berkshire by about 32 percentage points.
Huh.
So the entire outperformance over the past 10 years is because the market has gone down for the past 4 months and Berkshire stock has gone up because investors have gone to it because it's looked at because it's a safe stock.
Yeah.
Which I think it's going to keep doing that. It'll do well when the market's not doing well, like when the market's down. But if the market's even modestly profitable, I think the market's going to do better than Berkshire.
All right. So I have a different question to wrap things up. This will be our last one. What do you expect the first 5 years of the post-Buffett Berkshire era to look like?
Probably like the prior 5 years, except Buffett's not going to be in the office. It's a quiet company. They don't really do much. They don't have a bunch of splashy press releases. The operating businesses operate themselves. They report back to a few people at the corporate office. There's not a lot of micromanagement going on. I think it's going to change. Greg Abel's a quiet guy. He's the named CEO replacement for Berkshire. Ajit Jain is same thing, quiet guy, has his hand on the wheel of the insurance businesses. Ted and Todd, they do their thing, read annual reports, right? That's what they do. And then they have more of a hand as executives leading some of those subsidiaries. Honestly, I don't think much is going to be different. Now, I think it's a different story 5 years out from there. I think that's when you start seeing activist investors looking to call for sales of wholly owned subsidiaries and all of that kind of stuff. But I think the first 5 years is probably not that different. What do you think?
I think you're right. I think the change that will inevitably come will happen further out than 5 years. I actually think it could be pretty consistent with the current Berkshire until the people who are there now that are going to be the stewards of the business themselves start to step away.
Yeah.
Right. So when it's not Greg Abel as the CEO, but the CEO after Greg Abel, or when Ajit Jain decides he wants to move on from Berkshire, or when Ted and Todd move on, like when you start seeing that the second turnover in the C-suite after the current crop kind of steps into the leadership role.
Yeah.
I think that's when you could say all bets are off. I'll say this to close. The one thing that I truly hope never changes is that they don't update that website. I love how you forget, younger people don't know it. And I think it's easy even for old guys like us to forget like the look of the early 90s internet. And man, that website, it's like a nice trip down memory lane for me. It reminds me of like middle school and high school. It's fantastic.
I'm screen sharing it right now. So
Wait.
those of you that watch the video, and you can see.
But here's the
this
best
looks
one.
Like,
click on the annual letters part. The annual reports, top left. Yeah. Click. No. Yeah, that one. I love it.
yeah. No, it's bad. It's like
It's so bad.
highlighter. I mean, this is the thing. I feel like what they've done is somebody designed it, and then Buffett said, "Can you print it out and let me see it?
Yeah.
Print it out and I can see it." So they
So
pick
my
these.
other favorite part about it is that there's just blatant advertisements, but it's just like a typed sentence.
Yeah. So no, top left. This one is my favorite. You click on it. It says a message from Warren Buffett. So you click on it. That first time I ever went to the website, I saw that. I'm like, oh, let me click that. It's a message from Warren. It's an advertisement for Geico. It's an advertisement for Borsheim's.
It's the best.
It's great.
That'll be it. This and the $1.50 Costco hot dog are the hills I want to die on, man. I never want to see either of those change. I want to go to my grave as an old man knowing that the Berkshire Hathaway website is exactly as it is today.
Yeah. One last thing I want to say, talking about the post Warren Buffett, and I think we should say post Buffett era for the company too. Howard Buffett, his son, that's on the board, it's been on the board for a long time, and is the named replacement as chairman. Even though, well, there needs to be a vote for that, people. At some point, he needs to be elected by the shareholders, and he will be. But Howard Buffett's 70 years old. He's not in his 50s. So I do think it is potentially sooner rather than later, when we do get into a truly fully post-Buffett era for the business, that there's going to be calls for change. Selling off these small businesses that are a pittance of the size of the enterprise, and really refocusing and returning value to shareholders, as they say. So it'll be a sad day, but it's a day that'll come. All right, Jeff, let's wrap this up. Just a reminder, share your thoughts about it too, email us or find us on social and add us and let us know what you think about any of the things that we talked about. Weigh in, we'll share those on a future episode. And until then, I'm going to wrap it up and just remind everybody that we're happy to share our thoughts about investing, Berkshire Hathaway. But it's up to you to figure out your own opinions as you invest and do it. Probably not as well as Buffett, probably better than Jeff.
Speak for yourself. I'm a way better investor than Buffett.
You know, you have one thing in common with Buffett. You know somebody that's really old that's a good investor.
That's right. And it's not you.
That's me. All right, you guys, you can do it and stuff. So, Jeff, here it comes. Perfect ending. I'll see you next time in Omaha.
You will. See you next time.